So on March 23rd this year, somebody placed an $800 million bet on crude oil at 6:50 in the morning. 15 minutes later, Trump posted on Truth Social that he was calling off the Iran strikes. Oil dropped over 10% in the session. Jane Street walked away with $19 million. Forza Fund picked up $10 million. Cube got $5 million. Jump Trading went the wrong way and lost $15 million. But you know, even Boris has a bad day. And here's where it gets strange. These firms all have the same defense, dude. They're like, bro, our algorithm read a semaphore article 33 minutes before the post. We're just really good at parsing news. And I want you to imagine the meeting where they came up with this line. A bunch of cracked quants in a conference room. Patagonia vests, sleeves rolled up. One guy goes, okay, so we say the model predicted it from the news article. Another guy goes, but the post came 15 minutes after our trade. The article was 33 minutes before. So we'd need an algorithm that reads journalism and then perfectly times the size of a geopolitical decision before the politician makes it. And the first guy goes, yeah, that. Everyone nods. Send it, because the CFTC is going to investigate this with one commissioner and a 21% staff cut. They're not catching anyone, my guy. Now, you were taught in school about something called the efficient market hypothesis. Eugene Fama, University of Chicago, 1960s. The idea is that prices reflect all public information instantly. On paper, this is the foundation of every retail investing course on YouTube. In practice, public is a timeline, not a state of being. There's a 15-minute window between when the institution knows and when CNBC tells you. That window is where the wealth transfer happens. The retail trader spends a median of 6 minutes researching a stock. The institution spends 6 minutes front-running you. And this isn't even a new play. Let me tell you about Bryce's secret. In 2022, Jane Street allegedly ran a private Telegram channel named after a former Terraform Labs intern. That channel relayed insider info about when Terra was going to pull money from the curve pool. Jane Street dumped $192 million in UST before the peg broke. They walked away with an alleged $134 million in profit. Duquan got 15 years in federal prison. Jane Street filed a motion to dismiss in April and is still operating. Same firm, same play. 4 years later, they booked $16.1 billion in trading revenue in Q1 alone. So the leak doesn't come through a press release, bro. It comes through a Telegram chat, a golf course chat, a staffer who said something at dinner. By the time the headline hits your phone, the liquidity is already gone. You're not reacting to the market. You're providing the exit. And speaking of trying to predict markets, today's video is sponsored by Tradingby.ai. Look, you and I both know no algorithm is calling Trump's Truth Social posts in advance. But what an algorithm can do is trade a clean, rule-based strategy without flinching. Tradingby runs 3 different AI models on the same professional strategy: USD and GBP/USD, London and New York sessions. Same rules, same setups, 3 different brains, and they track which model actually calls direction right, day after day. You don't get a peek at a private Telegram channel, but you do get to watch how AI handles real market structure with transparent direction accuracy on every trade. The link is tradingby.ai in the description. Go check who's actually getting it right this week. Okay, so what do you actually do with this? You stop trading the news, dude. You stop pulling up a 15-minute candle after a headline drops and looking for a moving average crossover that confirms the move. That move happened an hour ago, in a Bloomberg terminal, in a Telegram chat named after some guy's intern. You are staring at the smoke. The fire is already out. I'm not telling you to quit the markets. I'm telling you to stop pretending you're playing the same game as Jane Street. You're not. They booked $16.1 billion last quarter. They are not your competitor. You are their counterparty. Every time you click sell because CNBC said something scary, somebody on the other side is closing a position they opened at 6:50 in the morning. That's the trade. That's always been the trade. The CFTC chairman, Michael Selig, said, "We're going to find them and we're going to bring actions." Cool. With what staff, my guy? Enforcement is down 2/3 since 2024. The cop on the beat is one person and a Bloomberg terminal. So look, the market isn't broken. It's not rigged in the conspiracy sense. It's just functioning exactly the way it was designed to function. A tiered information system that rewards whoever sits closest to the announcement. The retail trader sits at the end of that line. That's the whole position. You can't out-chart a leaked memo. You can't out-RSI a Truth Social post that hasn't been published yet. Close the app. Thanks for watching.